Now, the stock market has entered its first crash since 2007, and it's time for me to make one of those videos I might only make once. Now, if you're an investor these days having a look at your portfolio, you're probably thinking, this is it. I should never have bought stocks, this is it. This is the end of the stock market and the economy as we know it. Well, not so fast. You see, in times of crisis, the best source of information is not the frenzied media or your fellow panicked investors or parents. It is, in fact, the pages of history. Hailing from those pages of history, I'm here to tell you you're wrong and make you realize that this is the time to keep your head down, take names, and kick ass. Now, history itself, and indeed the stock market, has amongst many one tendency in common: they tend to repeat themselves. And when they do, and catastrophe inevitably rolls around, we humans being and investors in general tend to act in the exact same way, with fear, anxiety, and panic. Those, however, who dares to go against the stream will, when the dust settles, come out victorious. Now, it's said that the best way to predict the future is looking to the past. So let's have a look at the last stock market crashes over the last 100 years, see how they began, transpired, and how we all came out on the other side. Now, I want you to keep in mind that when I'm talking about these stock market crashes, I'm going to use numbers adjusted for inflation, so they will not reflect the actual dollar amount the Dow Jones dropped during these crises. The Roaring Twenties came to an abrupt end when the Wall Street crash of 1929 signaled the end and the greatest economic downturn in history. In fact, 1929 had 2 trading days so bad they are forever etched in the books of history as Black Monday and Black Tuesday, when the market went down 12.8 and 11.7% respectively. And by 1932, the Dow Jones closed at $41.22, representing the greatest fall in history of 89.2% from its pre-crisis peak, and it sent shockwaves through the whole world. Modern society came crumbling down, and economic growth was not to return until 10 years later in 1939 and the dawn of the Second World War. Adjusted for inflation, it took an exhausting 25 years for the Dow Jones to recover, and during the crash, it went from 5,600 down to 814. Now, 50 years later, the stock market is about to go through what is known as the Great Flash Crash of 1987. Now, the Corona crash has recently triggered something called circuit breakers, which are essentially safety mechanisms for when the market goes berserk. But if you thought 7 or 12% circuit breakers were bad, let me take you back to October 22nd, 1987, which was forever to be known as Black Monday. In a freak flash crash, the Dow Jones was sent tumbling 22.8%, marking the worst day in history. Investors were lost for words, and whether it was the tensions in the Persian Gulf, computers running wild, or just a natural end of the previous bull market of 5 years, 1987 must have seemed like the end of the world. Now, adjusted for inflation, it took 6 years for the market to recover, and it went from 6,020 all the way down to 4,100. Now we're going 13 years forward in time, and just about 20 years ago today, in 1999 and 2000, the frothing speculation in internet companies came to an abrupt end. And what seemed to be paradise on earth for Wall Streeters came falling down, with the Nasdaq closed 78% down from its 1999 peak, signaling the second greatest crash in history. Investors were indeed once again lost for words, and they wondered what the future were to bring if internet and IT companies weren't all they thought they would be. To put things in perspective, In the frothiest year in history, 1999, shares of US internet giant Qualcomm rose 2,619% in less than 12 months, and together with 12 other massive companies which all went up 1,000% or more, it signaled one of the greatest speculative bubbles in history. Now, it took years, even decades, for some big internet companies to reclaim their peak of the dot-com era, and the ramifications are still felt by investors today. It took 13 years for the market to recover, and adjusted for inflation, the Dow Jones went from 17,000 all the way down to 10,000. Now, the Dow Jones has yet to recover from its dot-com era burst, and the year 2007 rolls around. And in the deepest economic crisis since 1930, the stock market loses more than 50% of its value in a bear market stretching 2 years from 2000 and 2009, and the great financial crisis is upon us. The crisis shook the world to its foundation, and it left millions of people jobless and homeless. Investors wondered if the stock market or the financial system would ever be quite the same again after heavy regulations had to be put on the world's banking system. Now, adjusted for inflation, it took the Dow Jones Industrial Average almost 6 years to recover. The market went from 7,000 all the way down to 8,600. Now, it's 13 years later, and the year is now 2020, and a virus called Corona has rolled around. Now, the pages are yet to be filled in for this one, but I have a feeling you will find all the clues in the crashes of history. We'll go into a deep recession, and Wall Street, governments, employers and employees will panic. It will get darker and darker until one day there's light. And whichever way you spin it, greatness in investing, and indeed life in general, comes to those who dare go against the stream. As a wise man once said about investing, be fearful when others are greedy, and greedy when others are fearful. In other words, buy low and sell high. The World Championship of Investing has just started, so give it your all. Thanks for watching. Until next video.